Humanity has just signed its own financial death warrant. It happened quietly, without a press conference, without a breaking news alert on your phone, and certainly without any warning from the politicians who claim to represent you. But the ink is dry, and the consequences are now mathematically inevitable. We have crossed a line that no civilization in history has ever crossed and lived to tell the tale. $318 trillion. Let that number sink in for a second. $318,000 billion. It is a number so large it loses its meaning. It sounds like abstract noise. But I need you to understand that this is not just a statistic on a spreadsheet. This number is a weapon. It is a kinetic force that is currently destroying the structural integrity of the global economy. And the scary part? It is accelerating. You are watching this video because you feel it. You might not know the exact figures, but you know something is broken. You see it when you go to the grocery store and the prices have doubled. You see it when you look at house prices that make absolutely no sense compared to average wages. You feel it in the pit of your stomach, that gnawing sensation that the system is rigged, that the money in your bank account is melting away like ice on a hot pavement. You are right. It is melting, and the reason is this $318 trillion monster. To understand why silver is about to become the most valuable asset on the planet, and we will get to that because it is the only lifeboat left, you first have to look the monster in the eye. We are living in the greatest debt bubble in human history. To put this into perspective, global debt is now over 350% of global GDP. That means for every dollar of value the human race creates, every car built, every loaf of bread baked, every hour you work, we owe $3.50 to the system.
If you ran your household like this, you would be homeless. If a company ran its books like this, it would be liquidated. But governments? They have convinced you that they play by different rules. They tell you that debt doesn't matter because they can just print more money. They tell you that we can grow our way out of it. They are lying, and they know they are lying. The math is brutal and unforgiving. We have entered the exponential phase of the debt cycle. Look at a chart of US debt or global debt over the last 50 years. For decades, it was a gentle slope. Then, around 2008, it started to climb. But look at the last 4 years. It's not a slope anymore. It is a vertical wall. It is a hockey stick. In mathematics, this is called a singularity. It is the point where the curve goes vertical and approaches infinity. In physics, this happens inside a black hole. In economics, it happens right before a currency collapses. We are borrowing money just to pay the interest on the money we borrowed yesterday. The US government is now adding $1 trillion to the national debt every 100 days. Think about that pace. It took the United States 200 years to accumulate its first $1 trillion of debt, from George Washington to Ronald Reagan, 2 centuries. Now, we do it every 3 months. This is not sustainable. It is not a policy debate. It is simple arithmetic. Stein's law states, if something cannot go on forever, it will stop. The terrifying question is, how will it stop? There are only 2 ways this ends. History has run this experiment thousands of times, from the Roman Empire to Weimar Germany to Zimbabwe. There is no third option. Option A is default. The governments admit they are bankrupt, they stop paying their bonds, and the entire banking system evaporates overnight. Option B is debasement.
They print the money to pay the debt, destroying the value of the currency in the process. They will choose option B. They always choose option B, because option B buys them one more day of power. It buys them one more election cycle. It keeps the illusion alive for just a little bit longer. But here's the catch, and this is the secret that connects this debt mountain to the silver in your pocket. You cannot print wealth. You can only print claims on wealth. When you double the supply of paper money to pay off a $318 trillion debt, you do not make the world richer, you make the money worth half as much. You are currently standing on the train tracks staring at a freight train loaded with $318 trillion of liability moving at the speed of light. Most people are paralyzed. They are keeping their money in the bank thinking it's safe. They are buying bonds thinking they are assets. They are sleepwalking into the impact zone. But you are here because you want to survive. You want to know what happens when that train hits. You want to know why the smartest money in the world, the central banks, the billionaires, the insiders are quietly exiting the dollar and moving into physical assets. The collision is unavoidable, but the aftermath, that is where the greatest transfer of wealth in history will take place. The debt is the problem, but the solution the government is about to implement will unleash a force that will send precious metals into the stratosphere. To understand how violent this shift will be, we have to look at the trap they have built for themselves, because right now, the Federal Reserve and the world's central banks are caught in a room with walls that are closing in. They have triggered a mechanism that cannot be turned off. And in the next part, I am going to show you exactly how this trap works, why the interest rates are the detonator, and why the banking system is technically already dead.
So we have a $318 trillion mountain of debt. But size isn't the only thing that matters. For a long time, the financial elites told you that the size of the debt was irrelevant, and for a brief delusional moment in history, they were right. Why? Because the interest rates were at zero. Imagine you have a credit card with $1 million balance, but the interest rate is 0%. You don't care. You can make the minimum payment of a few pennies and live like a king. That is exactly what the world did for 15 years. From 2008 to 2021, the world enjoyed an era of free money. Governments borrowed trillions to fund wars, welfare, and waste. Corporations borrowed billions to buy back their own stock. People borrowed to buy houses they couldn't afford. It was a party fueled by cheap credit. But the party is over. The lights have been turned on and the police are at the door. When inflation started to rage, the direct result of that reckless spending, the Federal Reserve had to panic. They slammed on the brakes. They raised interest rates faster than at any time in history, and in doing so, they sprung the trap. They took that variable rate credit card with the massive balance and jacked a rate up to 5%, 6%, 7%. Suddenly, that manageable debt became a death sentence. Let's look at the United States government. This is the supposed safe haven of the world. Right now, the U.S. national debt payments have crossed a terrifying psychological line: $1 trillion a year. Think about that. The U.S. government now spends more on interest payments to bondholders than it spends on the entire U.S. military. It spends more on interest than on Medicaid. It is fast approaching the point where interest becomes the single largest line item in the budget. This is what economists call a death spiral. It works like quicksand. Because the government doesn't have the cash to pay this trillion-dollar interest bill, what do? They cut spending? No. They raise taxes? No, that's political suicide.
They borrow more. They are borrowing money just to pay the interest on the money they already borrowed. It is the textbook definition of a Ponzi scheme. If a private company did this, the CEO would be in handcuffs. When the government does it, they call it fiscal policy. But you cannot cheat math. As they borrow more to pay the interest, the debt grows larger. As the debt grows larger, the interest bill gets bigger. It is a runaway feedback loop, a self-feeding fire that consumes everything in its path. And here is where it gets personal. Here is where the trap snaps shut on your fingers. Who holds this debt? Who owns these U.S. Treasury bonds that are losing value every day as rates stay high? Your bank does.
The entire Western banking system uses U.S. government debt as its foundation. They call it pristine collateral. It is the bedrock of the financial system. But when interest rates rose, the value of those bonds crashed. We saw this with Silicon Valley Bank. They didn't make risky bets on crypto or gambling. They bought safe government bonds, and they went bankrupt because of it. The entire banking system is sitting on hundreds of billions of dollars of these unrealized losses. They are technically insolvent. The only reason they haven't collapsed yet is because everyone agrees to pretend the emperor is wearing clothes. They are hiding the losses in the footnotes of their balance sheets. But the market knows. The smart money knows. This brings us to the ultimate dilemma, the walls of the room that are crushing the Federal Reserve. The Fed has two choices, and both of them are catastrophic. Door number one, keep interest rates high to fight inflation. If they do this, the interest payments on the debt will consume the entire federal budget. The banking system will implode under the weight of devalued bonds. The economy will crash into a depression that makes 1929 look like a picnic. Door number two, cut interest rates and print money. If they do this to save the banks and the government, they admit defeat on inflation. They flood the world with dollars. The currency collapses. This is the definition of a trap. There is no good exit. There is no soft landing. There is only the choice of how you want to die, by fire, inflation, or by ice, deflation. History tells us exactly which door they will choose. No government in the history of mankind has ever chosen to voluntarily go bankrupt. They never choose the depression. They never choose austerity. They are politicians. Their only goal is survival. So they will choose the pivot. They will choose the printing press. They will choose to sacrifice the value of the currency to save the system. They are going to try to inflate away the debt. They are going to print that $318 trillion into oblivion. Most people see this coming and they are terrified. They see the inflation and they hoard cash, thinking they're being prudent. But holding cash during a sovereign debt crisis is like holding an anchor while trying to swim. It is the exact wrong move. Because when they flip that switch, when they pivot from fighting inflation to saving the system, something incredible happens to real assets. The illusion of paper wealth shatters, and the rush for physical reality begins. We are about to witness the moment the dam breaks, the moment they give up the fight and let the floodwaters of liquidity loose. And in that flood, there is one asset class that doesn't just float, it rises. In the next part, I'm going to show you exactly what this pivot looks like, why it triggers the greatest wealth transfer in history, and why the hyperinflation of the 1920s is the blueprint for the 2020s.
So here we stand at the precipice. The government is broke. The banks are insolvent. The debt is unpayable. In a sane world, this would mean bankruptcy. But we do not live in a sane world. We live in a world of fiat currency, where the rules of mathematics are suspended by the whims of central bankers. They are not going to let the system collapse. They are not going to let the stock market fall to zero. They are not going to let the U.S. government default on its bonds. Instead, they are going to cheat. The technical term is financial repression. The street name is money printing, but the reality is theft. To pay off a $318 trillion debt that cannot be paid, they have to debase the currency it is denominated in. They have to make the dollar worth less so the debt becomes easier to service. This is the pivot, and it is already happening. You might hear them call it quantitative easing. You might hear them call it yield curve control or providing liquidity. Do not be fooled by the jargon. These are just polite words for counterfeiting. When the Federal Reserve realizes that the U.S. government cannot pay the interest bill, they will step in as the buyer of last resort.
They will print fresh digital dollars out of thin air and use them to buy the government debt. Think about what that means. When you work, you trade your time and energy for money. When they print money, they create value from nothing. By doing this, they are diluting every single dollar you have saved. It is like pouring a gallon of water into a bottle of fine wine. The volume goes up, but the quality is destroyed. They are stealing your labor. They are stealing your retirement. They are stealing your children's future. And they are doing it right in front of your eyes. This is exactly what happened in Weimar Germany in the 1920s. The government had massive war debts they couldn't pay, so they printed marks. At first, it felt good. The stock market went up, people felt rich. But then, reality caught up. The currency evaporated. A loaf of bread cost a wheelbarrow of cash. We are walking that same path. The numbers are different, but the mechanics are identical. The pivot is the signal. When the Fed cuts rates and turns the printers back on to save the banks, they are firing the starting gun for the crack-up boom. This is a phenomenon where the stock market might go up in nominal terms, but the real value of your money crashes. You might have twice as many dollars, but they will buy half as much food. This is the phase where paper assets become dangerous. Bonds become certificates of confiscation. Cash becomes trash. But in this chaos, there is a sanctuary. As the flood of worthless paper drowns the world, the smart money, the central banks of the East, the billionaires, the insiders, is moving to the only lifeboat that has never sunk in 5,000 years of history. They are moving to the metals. And while everyone talks about gold, there is one metal that is currently coiled like a spring, sitting at a historically impossible price, ready to unleash a vertical move that will shock the world. While the masses are distracted by the stock market casino, and while the central banks are quietly hoarding gold to save themselves, there is an asset sitting in plain sight that offers the greatest asymmetric upside in financial history. Gold is the money of kings. It is the ultimate shield against the collapse of empires. You should own it. But if gold is the shield, silver is the sword. Silver is the only asset on Earth that is currently cheaper than it was in 1980. Let that sink in. Since 1980, the U.S. national debt has exploded by over 3,000%. The money supply has hyperinflated. Real estate prices have skyrocketed. Even the price of a loaf of bread is up 10x, yet silver is sitting at roughly 50% of its all-time high. This is not just a market anomaly. This is a coiled spring. The price of silver has been artificially compressed by decades of paper manipulation on the futures markets, COMEX. But the laws of physics apply to markets just as they applied to nature. The more you compress the spring, the more violent the release. And the suppression is about to break because of one undeniable fact. We are running out of the physical metal. This is the critical difference between gold and silver. Gold is hoarded. It sits in vaults forever. Silver is consumed. It is an industrial miracle metal. It is the most conductive element in the universe. It is inside every solar panel, every electric vehicle, every cruise missile, and every smartphone. The governments of the world are pushing for a green revolution and a digital future, but they have a problem. That future is mathematically impossible without massive amounts of silver.
We have entered a structural deficit. For the last 3 years, the world has consumed significantly more silver than the miners can dig out of the ground. The above-ground stockpiles are draining. The vaults in London and New York are bleeding ounces every single day. So, you have a perfect storm colliding. On one side, you have the industrial vacuum sucking up every available ounce for strategic electronics and energy. On the other side, you have the monetary panic, the $318 trillion debt crisis driving investors to flee dying paper currencies. When these two forces meet, when the desperate need for industrial metal clashes with the panicked rush for monetary safety, the price suppression game ends. The paper contracts that claim to represent silver will burn because there is no metal left to back them up. The price won't just rise, it will reset. This is the silver squeeze. It isn't just a meme or an internet theory. It is a supply and demand reality. The window to act is closing fast. Right now, you can still trade your devaluing paper dollars for physical ounces of silver. You can still trade the problem for the solution. But the day is coming, perhaps tomorrow, perhaps next month, when you will walk into a coin shop or log on to a bullion dealer's site and you will see the scariest words in the financial dictionary: out of stock. When that happens, the price on the screen won't matter. The only thing that will matter is what you hold in your hand. The debt bomb is ticking. The printers are warming up. The train is coming. You have been warned. The system is resetting. Do not be left holding the bag of worthless paper. Paper burns. Silver remains.